Emerging markets are playing an increasingly critical role in shaping the future of the world economy. As countries like China, India, Brazil, and others continue to experience rapid growth, they are not only becoming major players in global trade, but also driving innovation, investment, and consumption on an unprecedented scale. These markets are home to a significant portion of the world's population and are expected to contribute more than half of global GDP growth in the coming decades. Understanding the dynamics of these economies is essential for businesses, policymakers, and investors looking to navigate a rapidly evolving global landscape. One of the most significant ways in which emerging markets are influencing the global economy is through their role in international trade. Over the past few decades, many of these countries have transitioned from being primarily exporters of raw materials to becoming key players in manufacturing and services. China, for example, has established itself as a global manufacturing powerhouse, producing everything from electronics to textiles. Meanwhile, India has emerged as a leader in the services sector, particularly in information technology and business process outsourcing. As these countries expand their economic activities, they create new trade opportunities and supply chain networks that are reshaping global commerce. Emerging markets are also driving global demand for goods and services, particularly as their middle classes grow and consumer spending increases. The rapid urbanization and rising incomes in countries like Indonesia, Mexico, and Nigeria are creating new markets for a wide range of products, from consumer electronics to automobiles to luxury goods. This shift in consumption patterns presents both challenges and opportunities for multinational companies. Those that can adapt their products and strategies to meet the needs of these diverse and rapidly changing markets will be well positioned to capture significant growth. Investment is another area where emerging markets are making a substantial impact. As these countries continue to develop, they are attracting significant foreign direct investment (FDI), particularly in sectors such as technology, infrastructure, and renewable energy. Investors are drawn by the prospect of higher returns and the potential for growth that these markets offer compared to more mature economies. At the same time, many emerging markets are becoming sources of outbound investment, with companies from these regions expanding their footprint globally. Chinese firms, for example, have made significant investments in Africa, Latin America, and Southeast Asia, seeking to secure resources, access new markets, and diversify their portfolios. Innovation is a key driver of growth in emerging markets, where companies are often at the forefront of developing new technologies and business models tailored to local needs. For example, mobile payment solutions have taken off in countries like Kenya and China, where large segments of the population lacked access to traditional banking services. These innovations are not only transforming local economies, but are also being exported to other regions, influencing global trends. As emerging markets continue to invest in education, technology, and infrastructure, they are likely to become increasingly important hubs for innovation and entrepreneurship. However, the rise of emerging markets is not without challenges. Many of these countries face structural issues such as political instability, corruption, and inadequate infrastructure, which can hinder economic growth and create uncertainty for investors. Additionally, emerging markets are often more vulnerable to external shocks, such as fluctuations in commodity prices, changes in global interest rates, or geopolitical tensions. For example, the recent economic slowdown in China has had ripple effects across global markets, underscoring the interconnectedness of today's economy and the potential risks associated with rapid growth in emerging markets. Despite these challenges, the long-term outlook for emerging markets remains positive. Demographic trends, such as a growing and youthful population, are likely to support continued economic expansion. Moreover, many of these countries are implementing reforms aimed at improving governance, enhancing the business environment, and fostering sustainable development. As a result, emerging markets are expected to become increasingly influential in shaping global economic policies and priorities, particularly in areas like climate change, trade, and digital transformation.